Hello, everyone. We are in. Let's. Okay. Well, I'm going to check my audio. We can hear you. 1, 2, 3. Testing 1, 2, 3. Yeah. Okay. So we are in a very tough position at the moment. We have a Fed that is committed beyond belief that they're going to get inflation down. And what is that leading to? I think that was actually a very surprising FOMC meeting this week because they are telling us that, hey, we are going to continue increasing interest rates. Because 2 days before that, a day before that, we saw that they CPI came out lower than expected. Whoa, dollar fell. You can see it here. A dollar really fell. Okay. We've been falling for some time. Okay. Is that going to continue? Now we're actually seeing the reaction in the market of what the Fed wants us to do, what inflation's to do. We are going lower. Now that fundamentally is very critical. But we are still in a transition between Jesus and God, between CPI going lower and Powell, because they're still seeing that CPI is too high. We all can see that CPI at 7% is still too high, but we are leading in a direction. We also know that CPI is 9 months behind whatever the Fed wants us to do. So the market is 9 months behind. So if they continue to increase interest rates every single meeting going ahead, we might have an interest rate in the United States of America at around 5%. That seems to be 475 seems to be the peak of interest rates in the United States that is currently being priced in by the market. But if the market comes out, if CPI goes downtown, hello, Jack. Happy to have you here, by the way. If market, if the economy starts crashing down here, we are going to see a different Fed in January. That is very important because just because you believe or I believe something, I can tell you something for free. It doesn't matter. We have to go by what Mr. Fed, about Mr. Powell wants us to do. So we had a theory this year, right? Whenever the CPI is peaking, I am going to change my bias. We now have a still. Sorry, I'm going to change my direction whenever the Fed is changing. They didn't change. Am I back to dollar bullish then? I'm actually squeezed. I am squeezed as a pancake can be squeezed. You know, let me just show you something. I am as squeezed as this hard drive has been squeezed from a big box to a small box. We also now have seasonality coming in. Oops, that was the wrong one. We also have seasonality coming in that for dollar, for euro, we might start rising again. That we might peak on euro dollar in the January. That this one now might start rising seasonality wise. Why? What seasonality is that? That seasonality is the actual transaction of people paying taxes. It will happen no matter how you flip and flop it. Has that ever happened before? Let's check. All right. Has it ever checked before? We have this one. Okay, it went up in the end afterwards, but fair enough. We have this one. Okay, went up in the end. Okay. Has it happened ever in a downtrend before? 2020, before 2020? Yes, it did as well. So, am I worried about lack of dollar strength? Yes and no. But is my bias, is everything that I see currently cohesive with being dollar bullish? I don't blame you for being dollar bull or being dollar bear. I'm still going to be a bear until New Year's. I'm still going to follow my seasonality. I'm still going to sell your dollar for 1st of January because I've always done that. Does that mean that I'm gone away from a dollar bullishness, dollar bearishness? No. Am I considering that they were not as bearish in the Fed meeting this week? Yes. Am I considering seasonality? Yes. Am I changing my bias faster than I can change my own t-shirt? You can criticize me for that. But trading is about taking in the current piece of information that you have currently available ahead of you, which is what? We have high CPI, low unemployment, we have a housing market falling, we have PMIs falling, we have all the other indicator out there falling, except for CPI, which might take years to come back to. But if I come back tomorrow and say, I really should have known, then I should have known. But I don't care. All right. So if you look at dollar, you take a good look at dollar. Where are we? Where are we going? Where are we heading? Bearishly, where are we going? Where are we? Monthly, we are way in the between. Some kind of bullish, bearish December, which is actually pretty flat. If you look at the COT data from the dollar, what did that tell you? Most traders are still very bullish on dollar. Okay. What is that? Why is that so? Because Powell hasn't changed yet. CPI is still too high. We still need to get inflation lower. But positive things have changed. Positive things have happened. But to my surprise, it wasn't enough. So, euro. Have they started to buy euro or continue to buy euro? Not really this week. Have they started to buy Australian? Not really, but they have gone away from their shorts. Have they started to buy the? Have they started to buy the Japanese yen because of the dollar weakness? No, they just exited their shorts so they can use it on dollar. Have they started to buy gold? Yes, they have. So, moving into January, what are we experiencing in January? We are experiencing a euro dollar that peaks. We see euro dollar maybe this week, most likely, or next week, than the other likeliness, that we see that euro dollar will continue higher in a very aggressive manner. Let me just go to bullish. Okay. Have we reached the target yet? No. But what day is it? It is 18th. 18th of December. What does that mean? That means that we are supposed to take profit on our trades all the way back from August 22nd. And if you hold a trade for less than 3 months, it is 600 pips. But in downturn, you had 400 pips. So, by looking at this chart, currently, there's 600 pips upside. Currently, we haven't reached our target. Currently, I still want us to see higher prices on euro for this next upcoming week. I'm still a dollar bear. Why, you might ask? Seasonality a bit. We tend to have a very strong end to the year. And CPI, some of us starts to go over to dollar bearish. And we have kind of, a bullish technical trend. And we're going to see higher interest rates in Europe, more than we've seen before. That was the other outcome this week. So for me, it's an easy peasy lemon squeezy. But going for you, is this a good level to buy? Do you have technical confirmation that that setup is technically what you're supposed to be doing every single day, every single week? Probably not. So for you, I would say, hey, take a chill pill. Look at what is currently happening out there. And yeah, just gonna find my email. Yeah. Look out to what is out there. If you look at SEB, if you look at Danske, if you look at those two, just for 2 seconds at least, what do you generally see? Softer inflation, harder central banks, literally just what I said. The Fed did hike 50 basis points this week. 17 out of 19 members indicated Fed funds rate above 5%, which was more hawkish than expected. Powell says that I think it was 5.1. That was expected before, and now like 5 point whatever that point was. Saying that labor market is extremely tight and wage growth is high. However, Powell also left door open for more modest hikes in the future. Markets seem to have interpreted the meeting as a more or less neutral. I read it as hawkish. My bad. Or my view of it. Markets were also supported by November inflation data that being lower than expected at just 0.1 month-over-month headline and 0.2% month-over-month for the core. However, we note that wage-sensitive components of CPI did not really slow down. Because what does actually CPI in United States of America actually do? What is the CPI in America? What is it coming out of? It's coming out of services. It's coming out of goods. It's coming some parts more or less coming out of energy. And where is the famous oil price at the moment? 74. In the month of November, in the month of December, we have seen a fall in energy prices. Is that going to increase or decrease inflation in the United States of America? It's going to decrease. This is going to be dollar bearish. This, I don't know how long time it takes, actually, to be honest, for how long time it takes, because oil goes into so many things. So give it 3 months then, max, generally across the board. Because you have the gas price tomorrow. That is like real time. But then you have the cost of fuel that is on longer term contracts. Then you have the cost of transportation that is on longer term contracts. Then you also have some contracts for transportation that is bidding from time to time. Or businesses that is now renting out their so there is some delay in the system that is naturally to business. See if we can find it. So going over Danske again. ECB has also delivered 50 basis point rate hike, but as expected, but with a clear message that rate is going to go higher. That's just kind of what I mentioned earlier. They showed that inflation is exceeding 2% target, in 2025, and a recession in 2023 being very mild if rates follow pre-meeting market pricing, which also clearly indicates that there is a need and room for more rate hikes. President Lagarde did not find any comfort in the inflation declining to 10% year over year in November, even though it is so duper high. So it needs to come lower. The ECB said that they are expected to peak at 325 in 2023, but also depending on inflation on all the key variables, blah, 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 blah. Bank of England, also 50 basis point rate hike, but it was more dovish. They've always been dovish after the meeting. They always say, we don't think we're going to write anything in the future. But they keep doing it. They keep giving us interest rate hikes. For quite some time now. And if you go to Bank of England, BOE, Bank of England. That was the wrong one. Okay. Bank of England. Okay, thank you. But they are currently at whatever. They're currently at 3.5. But inflation is currently at 10.7, sorry. But what is really the mixture of that? That is very important to go into. Because what makes it go so high? I want to read that. Retail gas, electricity has increased to levels consistent with energy price guarantee and would remain elevated through the remainder of this year. So, gas and energy are key drivers of CPI. There's also an aftermath of the pandemic. There is also an aftermath of after the war, especially for electricity prices in Europe. Well, the fact is that Russia doesn't deliver gas to Europe anymore, and we use gas to power to heat our houses in Europe. Um, the other thing is, and then that kind of okay. So since we are an integrated market in Europe, we will then the producers will then sell to the highest price. And since there's a lot of demand, there's also a big willingness to pay for it, or people are still paying for it. Blah blah blah. Therefore, prices goes higher. We have food prices. Um, we have non-alcoholic beverage. We have yeah. We have a labor market in the UK that is very tight. Many people has the job. Then they have the ability to spend, and then they have the ability to pay for things and still have a decent living. Meaning they still have money to go and create demand, which the end creates more higher prices. You know, those things. So now we have been told by the Bank of England why. So what are we going to do about that? Somebody needs to lose their job. Somebody needs to reduce their prices because of lack of demand. Somebody needs to reduce the cost of energy. Somebody needs to reduce the cost of of petrol. But who is controlling the cost of petrol? Well, petrol companies, governments, okay, taxes, okay, OPEC. Um, one of the few legalized cartels in the world. What did Saudi Arabia do the other day? Didn't they want to cut production by like 2 million barrels? Well, that was just a rumor from Iran. Didn't they want to cut like 500,000 barrels per day? And I think that came from themselves. So they're trying to send the price of oil back up again. Why would they do so? Because they will make more money. In their own interest, they will make more money. For them to cover their own expenses for public if they're going to cover all the expenses because they pay all for all the expenses through the oil, I think it should be like around 80% or $80 per barrel for them to cover the complete cost of running the country. But for them to produce a barrel, $12, lowest one. Why do they have so low cost production? Because they do not need to send it through somewhere to someone, and they have very few wells, very big ones, the ones they have, and it's straight onto ships and straight on to the customer. Versus America in Texas, they need to store it in storage tanks because it's very far from the sea. It needs more handling before it comes to the customer. I don't know if Saudi Arabia has a very efficient way of doing things, but they have one of the lowest um, cost per production for barrel. So, how does this world of trading work? That's kind of what I wanted to talk about today. Okay, so when Saudi Arabia says, well, we want to what? We want to reduce our production. That means price of oil goes higher because they're the biggest producer. If there's a war in Ukraine, Russia, and Russia is not allowed anymore to send gas to Europe, that makes gas prices of Europe go up. And other related commodities that is dependent on gas. Um, so what do we do then? Okay, how else does things work? So for the currency market, we have earlier described, you know, that dollar and yen. You will go and buy that when you're scared, and you would buy C. You would also buy CHF, and you would buy gold. Would you buy or sell oil if you were scared? You would sell oil. If there so if you're scared, yeah, you would sell oil. What would you do if there's a new COVID? If go back to COVID again, if there was a big disruption in demand in China, what would you do? What would you sell? What would you buy? If I was myself again, I would then buy yen. If that's the only thing that's going to control the world, I would buy the yen. I would sell oil. I would sell iron ore. I would sell the Aussie. Why? Why does demand for products in China affect all those different markets? Because one, China is one of the biggest consumer of oils from I mentioned Saudi Arabia, and that price will go lower because demand goes lower. I would sell the Aussie because one, they sell a lot of coal to China. Uh, Australia is also a risk off currency whenever things goes to down the toilet. Australian economy also goes down the toilet. This is one of the more volatile one in that direction. I would buy yen because one is proximity to China, and that Chinese and Asia would go slower because of China, but also because that is a on sorry risk asset I would hide in Japan because if it's a very robust country. Um, moving ahead there, I want to be safe when things are going more terrible. If China now opens up and says, "Hey, we are going to be the world's greatest," and we have a lot of demand, what will I do? I would buy Aussie. I would sell the yen. I would probably sell dollar as well. I will also buy oil. I would buy the iron ore. I will buy steel. But I would also buy traveling. I would also buy, well, probably Far East Asia, some kind of airline companies in China. If they're public, I would probably buy um, some, what do you call those, microchip factories if I was able to connect semiconductor companies. I would sit and do anything that would go up with Chinese demand. I will sit in that if that is the only thing I'm gonna do. If there is riots in South America, would I sell the czar or buy the czar? I would probably do none of it. Riots doesn't matter. Riots isn't a thing that you can say, hey, this is going to ruin the country because financial systems are still working. Riots, it doesn't matter. But if Barclays tomorrow, if Credit Suisse goes downtown tomorrow and says, hey, white flag, we are taking vacation and we are going to go bankrupt. We are applying for Chapter 11. Oh, I would run to the bank and get my money out of the bank system as fast as I can. I would buy the dollar as a currency trader. I would be fearful. I would do a lot of things. that slight difference in the event. There is a famous one where 11th of March 2011, there was a devastating earthquake that led to a tsunami that came across the shores of Japan and just destroyed things, buildings, houses. People perished, and we have never seen them ever again. What do you do in that kind of sad, but still tradable situation? Your ethics is going to kick in. Should I profit on people perishing, dying? Should I profit on a tsunami? No, probably not. But if you sure do, the Japanese yen went up for 5 days straight after that event. That made the Japanese yen go not necessarily through the roof per se, give or take, but it definitely had its, its bullishness, if that's a word to say it. So here it is. There you go. Here we go. Boom. The Japanese yen quickly rose 7.95% in give or take 5 days. And then you can see the thing that happened afterwards, which really fell down again. So which one do you want to be a part of? Do you want to be a part of the strengthening or the weakening? This is how we are interconnected. The Japanese yen strengthens. At the same time, do you think that the Aussie becomes weaker or stronger? There you go. There's Aussie. So we go back down to the same date as back in 2011, March 11. Would the Aussie fall or would the Aussie rise? The Aussie is here. This is the day. There, I think it is. There one, yeah. It drops, but it continues to fall 4% before it then rises again. I'm not going to say that entirely is because of Japan, but it might likely be. Let's go to New Zealand. 2011, March. Both risk pairs falls on an event that happens in Japan. Okay. When we are thinking about how the market is connected, we become fearful, we become scared, we become hopeful on the events that's happening around us. Is there any events that's currently happening at the moment that would say, wow, let us run? Nothing at the moment. But I will warn you, there might be, as a prophecy from the master guru himself, Ivan, I can tell you one thing for absolutely free. In the coming days and weeks, beginning of January, maybe not so much, like up to half of January, I'm expecting some kind of risk event to happen out of the blue. I don't know. I don't want anyone to die. I don't want anyone to be like, wow, that's dark, Kevin. But it just that tends to happen. Some kind of risk event, some kind of dollar strengthening event, some kind of yen strengthening event. Even though that was 11th of March, it just went through. We have Soleimani. We have Kim Jong Un. We have Trump. We had Trump. We had attacks. We had bad stuff happening in January. So I'm not gonna. I don't want anything to happen. I don't want everyone to be in peace and everything be in harmony. But there is like this thing that tends to happen every year. So Be aware. Be aware. The other thing is, market is thin in January. Thin. Thin as a stick. You know? Leverage. Sorry. Volatility. Uh, spikes might happen without you knowing it. So, trading wise, fundamentally wise, we have a time where it might not be as easy to trade. You might lose your account a bit easier than normal because people are, boop, we are out of here. Just as much as France is out of the World Cup and didn't lose the cup, I didn't win the cup. People are taking a holiday now, and it takes some days in January before it kind of kicks back. But going back to what I think about the market, I think that dollar will weaken going into the next last week. It's gonna be a bit, like slowly rising, not slowly rising, and then woo, until we see what has actually happened. Aussie ending December is pretty terrible. Euro. Can't really say that it was a great one. Well, it's sorry, it's in the way, but it's the best one actually. New Zealand, yeah, there's a weekly take profit there. So, what do I believe for the future? Do I believe that dollar is strong right now? No. It was a strong ending to the week, yes, because of the Fed, yes, 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 but it doesn't matter to your fundamental bias. So dollar weakness, I believe, still for a couple of maybe a candle or two, take candles too before the end of the year. We have this week now, and then we have next week. Then we have this week, and then next week, and by 31st, we are done with the weakness. Though it can still continue to happen, but this is not aggressive downtrend anymore. It still is. So if you want to be a buying, you are a hero beyond a hero. But currently, there is nothing that would say, "Hey, we are bullish." On the others, okay, so that is dollar. So pound dollar still, I don't know, it's mediocre. Okay, don't chase it. It's not a great setup. Uh, maybe we'll fall more from 123, 124, but last hooray. New Zealand actually comes up very strongly. This one actually pops up for me as well. Potential short if you were to thinking of it technically, but we actually came back up again. So if this one now continues higher, that is just one higher high for me, and I'm good to buy it again. Aussie, nope, can't buy that. Euro, can't buy that. So that's wait kind of thing. Yen pairs, bearish or range. Euro was fun for as long as it lasted. Bearish, range bearish. USD and range. Moving over to US 30. Would you want to sell it? Yeah, you can sell it. Fair enough. Not going to stop you. Much child. You who once it took him up to 33,400 and what? 33,466. Yeah, probably a good one there, but sure. Be aware, but yeah, I guess that is bearish. Yeah, it's bearish. So just look for resistance going lower to 31,627. Nat gas, nope. Gold, bullish. Continues to be bullish, continues to look bullish. So good to the moon, good to the moon, good to the moon. Target would then be 1833. Bullish, 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 bullish. Maybe a bit slow down, but 1783 to 1833. So that is about 50 up or something. Yeah, pretty good. Pretty good. Oil, nothing really that I'm thinking about right now about it. Euro New Zealand, yeah. Could probably have sold it up there, but give twos. Yeah, S&P 500 has made a bearish fall again, so again, we will revisit later on. And Powell didn't help in that direction. Fundamentally, where are we? Dollar strength is still happening. CPI is still very high. Wage growth is still very high. And unemployment rate is still very low. We still have a falling housing market. We still have a falling occupancy rate. So yeah, it's a very diverse direction here. So we are, where do you fall? Do you fall in dollar bullishness or the dollar bearishness? Totally up to you. Go and back test January. Go and see what you can do for January. This upcoming week 2 now is going to be flat probably this week, and then next week we're going to have some fireworks. And then we have to wait another month until Fed changes their bias. But of course, if CPI comes out as bearish in January, that's going to be fun. That's going to be fun. Okay. Any other questions? Hope you guys are having a great day. I can't see any questions, even though you should have asked your questions a long time ago. But I appreciate every single one of you who is member here. Other than that, I will try to stream as much as I can this week. And then we will make the best out of it. Okay? Senor, have a good day.